If you ever wondered, am I missing out on money when I file my taxes? There's a very real chance the answer is yes. And it comes down to one credit that most people don't fully understand. Welcome back to my channel. I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes. And I'm all about helping you take control of your money and live smarter. Be sure to subscribe and turn on all notifications to our YouTube channel. And check out the blog site where we post every Monday, Wednesday, and Friday. Today, we're talking about the Earned Income Tax Credit, or the EITC. This credit puts real cash back in the pockets of working people, and yet every year, millions of taxpayers either don't claim it or don't realize they qualify. So, in this video, I'm going to break down what is the Earned Income Tax Credit actually is, who qualifies, how much it can be worth, and why filing a tax return, even when you're not required to, matters more than you think. If you work, have kids, are self-employed, or are trying to get ahead financially, this is the video you don't want to skip. Let's start simple. The Earned Income Tax Credit is a refundable federal tax credit designed to help low to moderate income workers and families. Now, those two words matter a lot. First, what is earned? You must have income from working. That could be a W-2 job, self-employed or gig work, or certain disability payments. This doesn't include Social Security payments, unemployment, and investment income. Second is refundable. This is huge. Refundable means you can get money back even if you owe $0 in federal taxes. So this is not just about lowering your tax bill. This credit could actually result in a refund check from the IRS. So why is the EITC so important? And here's why I stress it. So just remember, deductions lower your taxable income, while credits reduce your tax bill dollar for dollar. And refundable credits like the EITC go one step further. For many families, this refund helps them catch up on rent or utilities, pay off debt, build emergency savings, and cover childcare or school expenses. This credit exists because the tax system recognizes that working people still need help, especially after payroll taxes are taken out of every paycheck. Now, let's talk about eligibility, because this is where most of the confusion comes in at. So eligibility comes down to a couple of different factors. First, it depends on if you have any eligible dependents, whether that's children or grown dependents. And then it depends on your earned income, the type of earned income that you have. And it also comes down to your filing status. Your filing status is going to determine the amount that you're going to be able to get. And then we're going to come down to the number of qualifying children. And then we're going to see what the IRS limitations are, which will change yearly, and whether you still qualify or not. Let's break down each one of these a little further. So, even if you work part-time, you still may qualify for this credit. Even if you're a gig worker, if you work the side hustle, if you were an independent contractor, as long as the income was reported correctly to the IRS, you may qualify. So that's one hurdle we've covered. The next hurdle to cover is your income must be within IRS limits. The IRS sets income limits every year based on your filing status and how many qualifying children you have. As a general rule, the more children you have, the higher the income limit. Investment income also has to stay under a certain cap. And there's something important. You should check every year, even if you don't qualify before. Income changes, life changes, eligibility changes. So far, we've cleared two hurdles. The first hurdle being the type of earned income that you've earned. Next, if you cleared that one, the next one must be if your income falls within the IRS's limits. And now our third hurdle is our filing status. This matters. Generally, if you file as single, head of household, or married filing jointly, you'll qualify. But if you're married filing separately, you usually do not qualify. That's one of the downsides of this filing status. You don't qualify for as many credits when married filing separate. That's why it's always best to try to file joint if you're able to. So let's take a closer look at what is a qualifying child in the IRS's eyes. If you have children, the ITC can be significantly higher, but the IRS has very strict rules. A qualified child must meet all four of these tests shown on the screen. A relationship. So they must be either a child of yours, a stepchild, a foster child, sibling, or a descendant. Ages. They must be under the age of 19 or under 24 if they're a full-time college student. Residency. They must have lived with you for more than 6 months throughout the year. And then the support test. They didn't support themselves financially. You did it. You supported them throughout for the entire year. Every one qualifying child can dramatically increase your credit. So here's the four tests you must pass: the relationship test, the age test, residency, and the support. There are some other basic requirements that the IRS requires to qualify for the EITC. Number one, you must have a valid Social Security card. Number two, you must be a U.S. citizen or a full-time resident throughout the year. And number three, you must not be claiming any foreign income tax exclusion for the full year. Let's clear up a few myths around the EITC that I hear a lot. I didn't owe taxes, so I don't qualify. This is false. The EITC is a refundable credit. I'm self-employed, so I can't claim it. It's not true. Many self-employed taxpayers actually do qualify. I didn't qualify last year. Well, that doesn't mean you won't qualify this year. Claiming it increases my audit risk. The IRS doesn't review EITC claims carefully, but claiming a credit you qualify for accurately is not something to fear. Let's look at some of the reasons why you should file a tax return even if you may not be required to do so. Here's some of the biggest mistakes I see. People don't file a tax return because they earned very little, they weren't required to file, they had enough taxes withheld. But if you don't file, you won't get the credit, and no filing equals no refund. If you work, filing a return could literally mean the difference between getting nothing and getting thousands. Here's our final thoughts. The Earned Income Tax Credit is not a loophole. It's not a handout. It's a legitimate benefit for working people. If you worked, supported yourself or your family, and earned income, this credit may be one of the most powerful tools available to help you at tax time. If you're unsure whether you qualify, don't guess. Just ask, check, and get help. If this video helped you out, give it a like. And be sure to subscribe for more videos on taxes broken down in plain English without fear or confusion. And be sure to join me next week where we'll talk about what to do if you can't pay your taxes.